be frustrating if you're not on the right side of things. So make sure that you are trading correctly. So again, welcome aboard to our Trading Week Ahead live broadcast. We're officially starting. Our Oktoberfest / Halloween special is a 2-week trial in the live room at just $47, non-recurring through PayPal, so you can try it out for a couple of weeks. I highly recommend it. You get me every single day from 9 till 10:30, Monday through Friday. I'm usually there 8:45 to 10:45, but minimum I'm there at least 9 o'clock till 10:30, and you get specific entry triggers as well. So a lot to cover. Anyway, let's get on with it. Calhoun, what's going on? Not there. Anyway, welcome to our Trading Week Ahead broadcast. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this, you agree to not make actual trades. So, let's get on with it. No more PowerPoints, yay. So what's up with that wacky stock market? I am not a believer of this bounce. I call BS. I'm still a bear and I'm still long my inverse ETFs happily. Here's a quick strategy, a good quick swing trading strategy I did yesterday, which hopefully will work out. If you're in something long that's in deep kimchi and it's going against you, but you still think it's a good thing to own, like I do with TVIX, I sold on the way down. I took a stop loss on the way down, but then I reacquired my shares at the close. So that way you can get price improvement. If you're in something, and I called the top for my traders, I said sell 17, I think it was 35. We were in from the low six or the mid 16s. I had the long call and I told everyone sell, sell, sell at 1735 was the exit call for my day traders on Thursday. The point is, if you're swing trading something and it's going against you, start scaling out of it. But if you still believe in the position, which I do in TVIX, I still think it's good for quite a bit. To the upside, I think it's cheap anywhere under 18 or 20. Then I reacquire my shares there in case we get an overnight gap over the weekend and it gaps up. Now, if it gaps down against me and starts to sell off, I'll sell a couple hundred shares in the morning and then reacquire the shares into the close. So if you are doing a hybrid of day and swing trading, that's a quick strategy note. It's also a smart idea to consider intraday swing trading, right? Where you put on the trade early in the morning, and rather than just go for a quick scalp between 9:30 and 10:30 or whatnot, hold the trade till the end of the day, until 3:30 or so. And oftentimes you see those will race up for quite a long time. A good example is one of our favorite long ETF that we cover for our live room members is TQQQ. I mean, you've got a nice big up day. You don't want to just scalp the open for 20, 30, 40 cents when you can hold it for a point or two instead. So when you have good uptrending charts, make sure that you are maybe sell some of it at the first sign of a pullback after an open range breakout, like half the position. What I'll often do is I'll sell half in the morning, then let the other half ride until the close of the market. Usually I sell between 340, 345. And right before the close at 4 o'clock. So let's take a look at our market forecast. What's going up with the broad market? We've got quite a few things on deck next week. We've got chocolate covered pretzel day on Monday. I don't think anyone cares about that, but thanks to CNBC for the note for that in one of their videos. But more importantly, we've got the China trade meeting on the 10th, and there's some other report coming out on Friday. I forgot offhand which one. We had our PMI, both manufacturing, week before last that tanked the market. We got the services report, which should have tanked the market again, but didn't last week, as well as our jobs data. So overall, we've got lots of economic headwinds facing the market. And despite these 2 bounce days, I'm having nothing of it. And I'm looking to buy more of the inverse ETNs on weakness because of their patterns. Look at those in just a second. But first, obviously, our 200 SMA at the 2843 or so is the key technical support level. We lost the 50 and the 100, which I'm glad about back on a Thursday or Wednesday. But Thursday, We got a slowdown, and Friday we got a recovery. I'm not going to capitulate on my shorts unless we break and hold north of 30.30 for at least 2 or 3 days. The price that proves bears wrong is if the S&P regains a 30.30 and stays up there, and because every single high has been a bull trap, right? That's why I was telling you guys here this past throughout September. I said I call BS on this. I think this is a false breakout, and I was right. We had a 2 red candle sequence, and we had a big epic drop. It's like a basketball. It's goes down, dead cat bounce, and then it starts to bounce. And it's not a time to buy, because otherwise you're going to lose. What you want to do is instead look for good volatile breakouts and gap patterns in our current markets that are sustainable, that are consistent, and there's not a lot of them out there. So that's where I come in to help with my services, my live room and swing scans. So anyway, that's our market volatility. When we look for directional plays, we had a good directional, almost a month long, well, at least 3 weeks up, and the SQQQ is starting to pull back off its highs, but it's still in a directional uptrend. If you take a look at TVIX, still has all those bullish engulfings here, and despite some red pullbacks, I think the VIX anywhere under 17, and despite the contango and shrinkage or slippage from the VIX to the TVIX, which is a concern, by the way. You can Google contango and TVIX if you want to. Basically, if the VIX is 17%, it would be great to see this at $17, but it's not. It's lower. Anyway, the point is we're bullish engulfing a couple of times in a row. Hard support, the price that proves this wrong. Remember, TVIX is notorious for doing false breakouts. The previous 1-year low had been 1270. Then it dropped down to just under that, down to, I think, 1180. 1180 is the new year one low. If it drops again, it will almost certainly go down to like 11 or 1080 and then do some big pivot to the upside. So that's another quick trading tip for our current markets, is anticipate false breakouts and bounces. We take a look at good charts for both intraday and swing. UGAZ was good yesterday. We got a bullish cup of 14.5 resistance running up to just under that 16 whole number. Do keep an eye on UGAZ. I bought it earlier back at 13 and change, and I just held on to it, finding support with yet another bullish engulfing. There's two patterns that I found remarkably consistent in our current markets. One is bullish engulfing. And thanks to Steve Nissen for teaching me those because they work usually. So we got a bullish engulfing. If it doesn't, the price that proves it wrong is right over 12, and that's what small stops are for. But anyway, bullish engulfment there in UGAZ may lead to a breakout if it's able to climb over both the 50 and the 100 SMAs that are right here straddling 16. So the one pattern is bullish engulfing. The other is ascending triangles. I've seen a lot of those lead to really good breakouts as well. I don't know if I have an example here for you off the top of my head, but ascending triangles and bullish engulfing. Bullish engulfing on the daily and ascending triangles on the intraday. Technically, though this didn't move up much, this is an ascending triangle where it looks like this. But remember, trade management trumps chart patterns. Trade management, position sizing, adding to the winners, trading multiple instruments in the same sector. For example, our pot stocks have been up a little bit lately, but then back down. Or semiconductors have been really strong. Both AMD and Micron have been strong lately. Anyway, ascending triangles often lead to breakout continuations. Gap continuations are always, of course, our favorites. But what I found most consistent is the bullish engulfings on the daily and the ascending triangles on the intraday. And also those that have open range breakouts. When you're visually scanning for what's worth trading, for both day and swing trading, be sure to give preference to charts that had a lot of sustained buying during the first half hour, also known as ORBs, or open range breakouts. You can see this has gone from 960 up to 1060, so it's a one-pointer, right? You could have wrote it anywhere. Again, the specific entry is much less critical than is the exit, right? This is very much a market where things run up and they pull back, so tighten up trailing stops. But the entry, you know, whether you bought at 970 or 980 or 990 or 10 or 1010, wouldn't have mattered. Anywhere in here is fine, you would have made money. But the trick is you need to know the previous day's chart pattern. And that previous day's chart pattern setup is one thing that I teach in my live room at Trading Open exclusively. And it's also helpful for swing traders too, because it really gives you kind of like a coiled spring that's poised for a breakout if the uptrend ends on high volume. A high volume close, an HVC, as I've published for years, is also a good lead indicator for a follow-on trade to the upside. So that's a good chart. Micron's always a friend of the family, and this guy's been going steadily up for quite a bit after the big epic sell-off last week, right? In Ameritrade, I bought a few shares, just a 30-share initial trade into the close on strength because it looks like he's trying to bounce. It's been holding 33-ish, has been hard support for Ameritrade after the big drop on Tuesday, so good plays. Right, Marcelo, right about PCG. Hey, Vincenzo. Well, thanks, Mukesh. Yeah, it's unemployment report, which is record high lows. Hey, Andrew, good question. I don't know how many folks from Australia are out there, but good day. I've never been there. And the government of Fiji hired me once to come out and do training for the entire country. Was it Nauru and Siva? I forgot the name of the two big cities in Fiji. I met a lot of really nice people from Australia. So, hey, Nana, good question. Why do I use a white background on some charts and black on others? The close-up charts, I like to use black background because it's easier to visually see the nuances of the price action. The big picture charts, though, I like using the white charts because it gives us a really nice landscape look at visually being able to see where things are most likely to head next. So, but it's just a personal preference. That's one thing you might want to test out too for all of you is test out, you know, do you like white background charts or black background charts? Vote right now if you would. How many of you primarily use charts that have a black background? Just type in the word B or the letter B or W. I know it's early, it's Saturday. Don't want to make you guys work, but type in the letter B or W. Do you prefer black background charts or white background charts? They each have their advantages, you know, and it's mostly personal preference. Wow, it's just about split with slightly more than half using white. Interesting. I would have thought it would have been like 80% black background, but it's... Thanks, Bob, Stephen, Ann, Frenchie, Eileen, Mukesh, Jim, Fernando, Eric, Pat, Ed, Phil, Dawes, Ron, Jeffrey, RM, Ben, Frank, Deanna, and Emil, Al, Long, Paul, Jim, Don, BW, Bruce, Fernando, PN, RM. They're scrolling by. But thank you for your vote. In case you're curious, I used to be a statistician, so I'm really good at eyeballing data sets and drawing rough conclusions. It looks like around 70% white, 30% black. So interesting. Interesting. Good point, Glenn, about, yeah, white versus black. A question from Pat, can I speak to how I pick my entries and exits? The main thing to develop your skill in, and this is counterintuitive, but it's vital to your success as a trader, your profitability is determined by what? How small your stops are versus how much you make when you're right. But it's determined mostly by your exits. So figuring out your exit strategy for instruments is more important than entries. But how I set that up, I've got entire courses that would take hours to cover. So, but ask me in the room about live alerts. That's one thing I do too, is I don't pull alerts out of thin air. I have reasons for them. So, and I know you're in the live room, so just ask me, Ken, why this alert here, why that one, if there's one you got a question for. But in general, I like to go in 20 or 30 cents above a whole number and then sell right under the nearest whole number. This would be like a long kind of an intraday swing trade. I prefer ORBs where you've got an open range breakout. It's relatively quick. You get in at the first sign of a breakout and sell at the first pullback. But often trades within whole numbers make sense. So that's a core strategy to start with. You buy right above a whole number and sell right underneath the next. So for example, here one could have gotten in at 14, 20, or 40 and sold right under 15. You don't get the whole piece of it from 13 to 1580, but the whole number strategy is one to practice. And again, that's another reason to hate on the under $10 horrible stocks, because they don't have that kind of a range, right? They may go from 320 to 360, and unless you're trading a risky, foolhardy 5,000 shares trying to scalp, which is a horrible way to day trade, scalping is only for very experienced traders, and it's very high risk on the front end. And the odds are dramatically against you being successful trying to scalp cheap stocks. That's not how to day trade. You have my word on that. If my life depended on me helping all of you make a fortune day trading, I would absolutely prohibit trading under $10 stocks and focus instead on the ones that I like, like maybe $10, $12, $15 a share up to 20, 30, 40 a share, because they have much more consistency in terms of their breakout strength and their momentum. So for that reason, we like charts with superior volatility. But yeah, happy to answer that, Pat, if you have a question. I mean, that's just a couple of quick notes, but yeah, Vincenzo saying scalping is the fastest way to the poorhouse. Yeah, I mean, I've been day trading 20 years, and the most I'll scalp is maybe 3 to at most 500 shares, but mostly up to 300 shares, because I'd rather, like my colleague Tom Sosnoff says, trade small, trade often. I may do several dozen trades in the morning, but I hit and run with small initial risk. You want to trade in a way that minimizes your upfront risk, right? So the way to do that is limit your share size and limit the frequency of trades, but not to where you're only doing 2 or 3 trades a day. You will not make it as a trader if you undertrade. You need to have the law of large numbers working for you, meaning you're taking shots at charts that actually have great trade potential and good setups that have some degree of consistency. And trade them in a market that's going to be favorable to your trades. And the markets, what's the story of the market? Down, consolidate, a short-lived up, and then a crash and burn with all these big red candles telling us selling pressure is dominant. I'm not going to compare. I will start scaling out of my inverse ETFs as the market keeps going up, of course, to minimize cost of being wrong, but I'm still going to leave at least a few $1,000s in my inverse ETNs unless we break 30-30 and hold it for any length of time. We got lots of good volatility headed our way. This is very much a trader's market, folks, where you really have to be careful about risk management, stock and ETF selection or instrument selection if you're trading other instruments, and carefully figuring out which charts are most likely to do well for you. If you're intraday trading, there's plenty of opportunities to work with, but you have to figure out which charts make sense. All right, let's go ahead and wrap up. I got to wrap. I've got swing scans coming up. But I hope that gives you some insights in terms of the type of charts that we like to cover in my live room. And one thing that traders really like about my live room that nobody else in the world does, unless there's some copycats that have come along in the 20 years that I've been doing this that I'm not aware of, but in the live room, one thing that's really neat, this is kind of a screen cap of my regular live room workstation. I will cover stocks under $10 on occasion if they look really strong like this guy, but only 1 or 2. The dominant theme of my live room, this is like, we may have 1 or 2 of these a day, but most of the charts are in the 10, 12, 15 share list. The thing that I do is I give people the watch list, but most critically, I give them the entry prices to practice and learn from in the demo account before the opening bell. So that way you don't have to use proprietary software scanners like other people make you do. You don't have to try and hope you follow some guru who's magically making thousands of dollars while you're not. And every time you try and copy the guy's things, you blow up your account. I don't do that. I'm very responsible, and I give people specific triggers for what's worth trading ahead of time. So that way you can develop your own trading watch list based on that. And a lot of new traders that I work with, so many hundreds of folks as members, we have traders from around the world. They'll maybe pick 2 or 3 out of the list of 8 or 10 that I provide each day to really hone in on and follow. So we do cover the cheap charts, but we don't ever trade thinly traded instruments. Minimum 15,000 shares per minute is important, so you don't get front run by people that front run cheap stocks. Safety in numbers. And I'm a guy that has tax return proof that I actually really trade. Anybody that claims to be making a fortune trading, it's kind of like a common theme now of social media disruptor traders, where you got these moron kids under 40 that are all over Instagram. They claim to be making a big fortune, things in common that are all bullshit. And then they claim to be making thousands of dollars a day, mostly. Of course, they put in a couple red days to make it look good. It's all a big show. And they do an expert job of showmanship, so hats off to those guys. But they all have this in common. They're like under 40. They trade thousands of shares of cheap-ass stocks that no one else can trade successfully. They front-run their members by selectively only picking like $3 biotech crap stocks. And they take advantage. They're very predatory, and they charge a fortune for their services that aren't any good in the first place. So if they were any good, they could show tax return proof that they could actually trade. But you won't ever see that because it's a show, right? I'm the real thing. So since the year 2000, so they can try and disrupt all they want. I'll still be here in 20 years, and they won't. Anyway, do join my live room at Trading Open. I got a $47 special for 2 weeks, non-recurring, so just a one-time. $47, you're getting over, 15 hours of training with me personally for just $47. That's a deal. See if it's right for you, and if not, no harm, no foul. Your time automatically ends at 2 weeks. If you want to stick around, you can join annual at $9.97, or the monthly is $197, but this is half off that, so I would do that. So anyway, that's it. We're going to wrap. Thank you all for being here. I appreciate it. This is a frustrating market to be in because, as Kramer correctly noted, we have non-standard valuations driving price action in the markets, right? We've got, headline news, we've got tweets, we've got trade war with China. How susceptible are they to tariff impact on their company's financials? Are they subject to regulatory scrutiny like Facebook and some of the other social media type of platforms? All these non-standard things beyond simple earnings that are driving price action. And if you're not prepared to trade it the right way, you just get in trouble because this is a very challenging up and down market. So I hope this, random thoughts give you some good ideas in terms of things that can help. And we're going to wrap up. Hey, you too, Long. Appreciate it. Hey, Jim, I cover, in general, in the live room, anything that's up at a 2-day high is valid for a swing trade. So almost every day we cover at least 1 or 2 swing trades, right? Virtually every day, at least one of them will be good for a swing trade. And I highlight those. I'll say for a day or a swing trade, here's the entry trigger. So that way you get coverage daily. And the neat thing is, I got so many hundreds of folks in the room, you can ask questions. And unlike other rooms, I don't choose a platform that intentionally where I hire live room shills or cheerleaders to say, oh, way to go, I just made $5,000. It's all a big show. I use this GoToWebinar so you can't even see the comments from other people. These social media driven day traders all use platforms where they give people free access to the room in exchange for posting attaboys, all kinds of BS out there in the industry. I'm not the BS, I'm the honest guy. So I hope I can help you make bigger winning trades more often. And I got to run because I got swing scans in a couple minutes. Yeah, I agree, Pat. Yeah, the consumer cyclicals and food and like Dollar Tree, I think, is at a 50. It's too expensive. I think it's over 100 a share. But a lot of the defensive plays are where money's going. Money finds a home, leading to a potential move up in gold, and our defensive plays, as well as whatever is hot on the day. So anyway, best wishes for success in your trades. I'll see you guys next time. Bye for now.